In this presentation, we will enter bills and pay bills within QuickBooks Pro 2019. Here we are. For more accounting information and accounting courses, visit our website at accountinginstruction.info. We are in the home page. We currently have the open windows open. To open the open windows, go to the view drop-down and the open windows list. What we will be doing this time is entering a few bills and then paying some of those bills in the vendors section. These are going to be some of the normal bills that we'll have at the end of the month. So we might be paying the utility bill, the phone bill, and whatnot. A couple different options we have when we're paying those bills. One is that we could just write a check for those bills, either entering the check here or going to the check register and entering that data into the register to be printed. Or we can enter the bill and then pay the bills over here. There's some pros and cons to each of these. If we just write the check, then it's going to be a faster transaction. What we will be doing there will be to decrease the checking account and record the related expenses at that point in time. There's an added step to entering the bills and paying the bills, but it might be something that is useful because it'll run through the accounts payable and it'll allow us to track the bills and sort the bills and decide which bills we want to pay and possibly which bills we don't want to pay. So it's useful then oftentimes to, even with the normal bills, once we get the bill, to enter the bill into the system. What will happen here is it's going to increase the accounts payable, a liability that we owe, and record the bill at that point in time. In so doing, we'll record the expense at the point in time that we enter it, at this point, which is closer to the time that we actually used or consumed whatever it is we're entering, whether that be the utility bill or the phone bill or whatnot. That's better accrual accounting. And then we can track those and then pay them and decide which ones we want to pay as they become due. If we go through this process, as we'll do now, this transaction is going to be increasing accounts payable, increasing the expense, then we'll decrease the accounts payable and pay the bill with a check in this process. Also note that we have this track up here, and we may enter bills in this format when we pay for the bill as we get inventory. So this is another kind of receive inventory with a bill. That would only be here if we're talking about merchandising companies. Otherwise, if we're talking about just service companies, we'll just have this lower track. So we're going to go ahead and enter some bills. So we're going to go to enter bills. You'll recall that the bill looks a whole lot like a check, except that it says bill up top. All the data input will be much the same. However, the fact that it is a bill means to us that it's going to be increasing the accounts payable, not decreasing the checking account. So we're going to write the first bill for our phone company. It's going to be Verizon's the phone company. If we select the drop down, we can find Verizon here, or we can just start typing in Verizon is our phone company, and it'll autofill. I'm going to select a tab to go through. It's going to go 228, that's the date we want. Reference number, none. We're going to say the amount is going to be 365. We're going to give on the amount and tab through this. Here we go, terms and the memo. We may want to put something, I'm not going to put a memo here, but anything in the memo that would be easier to track and look back, anything you could think of that would be easier to go back and look at if there is a problem, is useful here. So you might want to put, the date of the bill or something like that in the memo. Then we've got the two tabs that look very similar to the checks two tabs, if not exactly the same. So we have the expenses tab and the items tab. Expense is going to be where we put anything that's basically not an inventory item, which could be an expense. Most of the time is an expense, but could also be an asset as well if we're purchasing something that is large, like property, plant, and equipment or equipment. And then the items are going to be here when we have inventory items, and any item will be increasing inventory. So we're going to be here on the expenses, and this is going to be the telephone expense. So we can put in here telephone expense. Now note that as we do this this is the first month we really entered it as a bill. So therefore we still have to populate it. We already had the vendor up here because we entered the vendor last month, but wrote a check for it. Therefore, it's not populating automatically into the bill. In other words, we didn't have to set up another vendor called Verizon. However, we do have to enter the account it's going to again because we wrote a check last time as opposed to a bill. After we enter the information this month as a bill, it should then auto-populate. So in other words, we're going to write the telephone company, drop down telephone company, which we could find, or telephone expense, which we could find here, or type in telephone expense, tab. And then depending on the settings, next time it should just be able to populate and remember that this is going to the telephone expense. So if you're going to a new company and you just start entering bills, then hopefully it'll basically memorize what happened last month, and it'll be pretty easy for that process to happen. If it's the first month of operation, then we're going to have to enter more of this data in. It's going to be easier to go after the following couple months, assuming things are set up correctly and we want to keep going with the prior system. So then we're going to say save and close. And we can go check this out on the reports by going to reports. We're going to look at the balance sheet first, going to the company and financials, and scrolling down to the balance sheet standard. Balance sheet standard. And we're going to then change the dates in the customized reports. And we'll go to the date range of 01/01/19 to 12/31/19. And we'll select that range and OK. So then we're going to say that what happened is going to be that the accounts payable is going up. Here's accounts payable. Double clicking on the accounts payable, we're going to find that bill to Verizon. Double clicking on that Verizon, there's the bill. The other side's going to go to the expense, of course. So if we close that back out, close this back out, that's on the profit and loss or income statement. So we'll go to the drop down up top and reports, and we will go to company and financials, and we'll look at that first one, the profit and loss, and select that item. Then we're going to change the dates from 01/01/19 to 12/31/19. And we're looking here, the telephone. If we scroll back down, here's the telephone under the expenses. Double clicking on that item, we should then find the accounts payable. Double clicking on that, there's the bill. Closing this back out, going to go back to the balance sheet, going to go back to a payable, and one other report we can check as we go. That amount is $1,565 if we go to reports up top. If we go to vendors and payables, we can support that with the vendor balance detail. Vendor balance detail, that $1,565 is here, and if we look at it by vendor, we see Verizon here. There's the accounts payable, there's the $365. Now we'll go through this process again. We're going to go to the home page, and we're going to go to, once again, we're going to enter a bill. So we're going to go to another bill that we're going to enter. This one's going to be for the internet, and our company is a company around here, at least it's Spectrum. And so Spectrum is not here. If I hit the drop down, it's a new company. So we set up the internet and we set it up with Spectrum. I'm going to add it by saying Spectrum. And then we're going to say tab. It's going to say if we want to add it. We could set up the full ad, but I don't need to because I don't want to put in the phone number for Spectrum and whatnot. We're just going to quick add it so that we can later write the check to them. The date is going to be the same, and we're going to say the amount is 180. Due date we'll keep there. Terms, memo, we'll keep the same. Then we're going to say the expense item is going to go to internet expense. We want to break this out. Now note, we could put it into utilities, or maybe we would group it into the phone company as well. But this one I want to break out and so we can track it separately. And this would be a decision we would want to make as we enter this information into the system. How much grouping do we want? How many separate expense accounts do we want to have? The less expense accounts we have, the easier it is to look through the reports. The more expense accounts we have, the more detail we have, but the more complex things can look. So if first we want to do is we want to look at this expense report and say, this is what was given to us by the system, by QuickBooks, when we set up our company as this particular industry type. And so if it's something is here that looks reasonable, we would then use that. If we want more detail, however, then we can break it out and customize to what we would like. The thing to keep in mind when we break it out is whether or not it's going to be significant to decision making. In other words, is the dollar amount in this expense significant to decision making? If so, it might be useful to break it out. If not, then you might just want to put it into one of the existing expense accounts and keep it more simplified in that format. So we're going to break this one out, and I'm going to type in here, instead of we could go up to the top and go new, but I'm just going to type in the internet expense. And we probably don't need expense next to it, because note that a lot of the other accounts don't say expense next to it, but I'll keep that as the format. And I'm going to say, and notice as I do that, it actually does have a computer and internet expense. So that's probably the best one to use there. So actually I will not set up the new one. Let's keep it at computer and internet expense and select tab. And we'll say that's going to be for the 180 and say save and close. Once again, if we check this out on the balance sheet, we're going to say that, so I'm in the balance sheet in the open windows. We're going to say that the accounts payable should have increased. Double clicking the accounts payable. There's the 180 there. Closing this back out. We know that the other side is going to go to the profit and loss. So if we go to the profit and loss in the open windows, we have the computer and internet. There's the 180 there. Going back to the balance sheet in the open windows, checking that we're at 1,745 in the accounts payable, which should also be the balance in the vendor balance detail in the open windows. So there's the 1,745 there, and we have the Spectrum bill 180 here. So that's going to be that transaction. Next bill, we're going to go back to home page. We're going to enter the bill. So we're going to enter another one. This one's going to go to the electric company. For us is Edison. So we're going to pay Edison for the electric utilities. And we're going to just type it in there, Edison, and it will auto-populate for us. Once again, at the end of the month, 228. The amount is going to be for 648. Oop. So it's trying to do some math. I actually hit the calculator. It's trying to do math for me. But 648. And we'll keep that as the due date. No terms, memos are good, but we're not going to put any in at this point. And we're going to, and note, this due date could really help you to manage our information. So if we look at the due date on the bill, as we look at the Edison bill and put this into the bill due date, really helpful, because then when we go to pay bill items, we can sort it by which bills are due at this point in time, or which bills are becoming due in a short period of time. So this is actually really effective if you use it well. If you look at the bills that we have, enter this into the system, then you can use that to determine which bills you owe and which bills you want to pay in the short period of time. Then we're going to choose the account down here. It's not going to auto-populate again, because this is the first time that we wrote a bill to Edison, although we have written a check. After we have written this first bill, the following bills in the following month should be much the same. So going to Edison, this is another decision we have. We could break it out into something like the electric bill versus the gas or something like that. But the default, if we go to the default, would be, of course, utilities, grouping those probably electric and gas together. And that's what we will use here. We could choose that by typing in utilities. And there it is. We're going to save and close that one. Go back to our little routine here. We're going to go to the balance sheet. We're going to say in accounts payable on the balance sheet, on the open windows balance sheet, accounts payable on the balance sheet, double clicking on it, zooming into it. There's the utilities. So it's recording there, closing this back out. Going back to the profit and loss, the other side's on the income statement. Here it is on the income statement. Utilities is going to be included here. Decreasing net income. Double clicking the utilities. There's going to be the 648. Closing this back out. Going back to the balance sheet in the open windows. We note that the accounts payable is $2,393. We can also find that in the vendor balance detail in the open windows. $2,393 here. And we see that we are currently looking at Edison, has that 648 in it. So that's the one we're dealing with. Now we're going to go through the process of paying some of these. So we're going to go to the home tab, or back to home over here in the open windows. And we've entered the bills. Now we're going to pay the bills. So we're going to select pay bills, and it'll then manage our bills for us. Now note, we have this due on or before. That's going to help us to manage based on the due dates that we entered into the bills. So if we want to sort this, that's one of the ways that we can sort. Show all, we'll just give all, and it won't take out the ones with a due date. And then we've got the filter. We can select by filter and select specific vendors. If there's multiple items for particular vendors, we can see that. I'm going to have all vendors here. We could sort by, again, due date, discount, vendor, amount due. This will sort by basically these headings. And then we have this item, which would help us to select all if we wanted to select everything. or clear all, we're going to be selecting just these three that we wrote: Verizon, Spectrum, Edison. Those are the three we're going to have. And if we wanted to see the bills, we can go to bills here. There's Edison, and it might go just to the last bill here. So if we wanted to select one bill, we can go to just check off one of these, and we can go from this window to the bill window. Then the set discount, the set credits, the date we're going to have this, we're going to pay on the same date. Now, of course, here we entered them and then paid them on the same date. That might be useful. For example, if we wanted to print them all at the same time, we can print them from this screen, which is pretty easy to do. So if you just go through the practice of entering them into the bill and then paying them with this screen, that's pretty easy to then go to just the print here, put the checks into the printer, and then print them all in a set format. So we're going to say the date we're going to print is 2/28. We, of course, are going to assign the checks because this is going to be the practice problem. If you're entering this information into the system and then writing the checks by hand, we will be writing checks. We can write the checks by hand and then just let the system generate the checks here in accordance with the check numbers in order. That's what we will do. We're going to go ahead and pay the bills now. So we'll pay the bills. And it says, let QuickBooks assign the check number, or we assign it. I'm going to let QuickBooks assign it because it's going to pick the next check number in the system, which should match what we are using in our checkbook. And then say OK. And it'll beep a few times, showing that it's done so. And we'll say done. And then we'll check this in the check register, going to the banking and use register. OK. And then we'll see these three. There's the three in the check register. We want to check the check number is what we have in our system if we're writing it outside or printing these check numbers. We want to see that those line up. We note that they are checks, although it says bill payment. So bill payment is just another term for a check, but it's a specific check that we used to pay the bill. In other words, it means that we're decreasing accounts payable, and the other side is going to be the checking account going down rather than some other account like an expense account that's happening. So if we double click on any of these, we'll see an actual check. And you might say, I don't remember this screen. I don't remember entering a check. I entered a bill, not a check. This looks like the bill screen, not the check screen. And that's because we did the quick screen to pay the bills. And that means that QuickBooks generated these forms very quickly. But when we go into the actual form, it of course looks like this. The difference here between this and another type of check that we would have manually entered is in the bottom here where it says bills paid in this transaction. So this is connecting to a bill rather than us just choosing an account. But of course it's still just a check that we're writing. The check is the thing that's driving this transaction. So if we close this back out and close this, we're going to go to the balance sheet this time. Once again, we're going to go to let's go to the cash first. If we double click cash, the checking account, we know then that we should find these three checks. So here's the three checks. The other side going to be to accounts payable. And we know that has to be the case because they're not only checks, they're bill payment / checks or dash checks. So they're checks, but they were paid for bills, meaning the other side has to be accounts payable. Then we're going to close this back out again. We are going to go to the accounts payable. Here's the accounts payable. Double clicking this item, we'll see here's those three checks. So there's the checks we wrote. We should be able to see basically this information going into accounts payable and then us paying them. So here's the bill, for example, here's the check. Here's the bill, here's the check. And here's the bill, here's the check. So that should be the kind of what we should see in the accounts payable ledger, the GL or the transaction by account. And we see that, of course, the driving factors here are going to be the bill and the bill payment. Now, don't get these two confused because the bill payment is a check. This is us paying the bill with a check, whereas this is us entering the bill. This is going to be the typical format for the payable account. We're going to enter the bills and then we're going to pay the bills. And so we should be able to tick and tie off the bills and the payments for them in this account. Note that closing this, the payment of the bill doesn't affect the income statement. The income statement wasn't affected by us paying the check, writing the check. The income statement was affected when we entered the bill, that's when we recorded the expense. When we paid the bill, the two accounts was cash and accounts payable. We'll note that the accounts payable has 1,200 in it as we go to the transaction, the vendor balance detail. So we'll go to the vendor balance detail. There's the 1,200. So this is supporting or backing up the amount in the balance sheet. And we can see that if we look at the individual accounts here, we had Edison, we paid this bill. Again, we should see a similar format. Here's the bill, here's it being paid. We don't owe Edison anything anymore. Here's the Spectrum, here's the bill, here's it being paid. We no longer owe anything to Spectrum. Over here, we'll see the running balance. Here's the bill, increase in the running balance. Then we paid it, no longer having anything. And then Verizon, here's the bill, here's the payment. We no longer owe anything to Verizon. For more accounting information and accounting courses, visit our website at accountinginstruction.info.